Welcome to Tackle Trading. This is Coach G, and I just want to do a real quick video in case you guys missed the coaches show this afternoon. We had a great coaches show like we do every Tuesday where we do our take on the markets. But what I want you to focus on is this. In case you missed it, yesterday we had personal income and spending on the economic calendar. And what I noticed here is personal income and spending. Income went up, the spending dropped just a little bit. Month over month, the spending has gone down for April. If you compare that to last April, month over month spending went up. Just wanted to take note, nothing real drastic, but I see a trend starting to break here. I see this dropping. Why is spending going down and why does that matter? What does that affect? What sector? How is that going to affect the market? So if you look at the market, it's right at a neutral point here. It could go either way. Here you have the 50-day moving average, and it's sitting right below the 20. And we're starting to lose a little momentum. We're starting to barely make newer highs. We call this melting up, a slow grind higher. But this could break down if you start getting economic news, such as personal spending breaking down. So there's a lot of areas I want to show you that I'm looking at to make my decision on going forward with the market, just so I can kind of get an outlook. So here's the markets. Which way will it go? Well, we have news at the end of this week with the unemployment data. But some of the areas I'm looking at is since spending's dropping, I'm keeping my eye on retail. The ETF for that is RTH. Retail's had a nice bullish run, as you can tell right through here. And then it started to flatten out, and now it's sliding to the downside just a little bit. The moving average is crossed here. And I'm looking at the support here at 74.60. So at 74.60, that'll be my spot if I see the retail sector breaking down, probably because spending is down. Therefore, the retailers are going to feel it, the stores that you shop at. If you're not spending money, the retailers will lower their earnings, and you'll start to see it in that sector. So keep your eye on the retail sector here. That's RTH. The next one I want you to keep your eye on is EEM. That's the emerging markets. A lot of news in Greece right now about them defaulting once again. It's been going on and on. So you're seeing the news from Europe bring us down, bring the U.S. markets down. It's a global economy. And you'll notice right about here, we had a neutral spot. We made a lower high. And on May 22nd, we started to break down. We confirmed a downtrend, lower lows, and we're now in the bottom of the channel. This could rally up a little bit to the 20-day moving average. But if you start to see this break down through the channel and get even steeper, that will start bringing our markets down also. The next one I want to look at is a similar chart to that. This is Victor Edward Uncle, VEU. We are in a neutral channel here. This is the entire world of stocks that are not American. So take the biggest companies out there. What would that index look like if you take all the American companies out there and just left the world's biggest stocks? So this is like the Dow Jones of the world that is not American. So the rest of the world, what is it doing? It is on support also. We have double top, double bottom. This could break tomorrow or this week. Keep your eye on that. If VEU, the Vanguard International Equity Index, breaks below 50 here, there's a breakout point here. That's a major support, and one here. Look out below on our markets. It'll pull us down also. The next one I want to look at is an indicator that I developed, and this measures all the stocks on the Archipelago Exchange. So there's over 8,000 stocks traded. I'm looking at an entire market, not just the S&P or the Dow, but the entire market. Right now, even though the market's looking slightly bullish, more stocks were making lows on their 3-month chart. This is the AR high 3-month minus the AR low 3-month. This is the Archipelago Exchange stocks making highs for the last 3 months minus the stocks making lows. The net difference is 45 more stocks are making lows. Now, after researching this indicator, if I get another day where this bar is below 40, another red bar at a negative 40, or more, that means there's pressure building up on the downside that's always preceded a big pullback in the market, like these previous times here on March 6th, March 9th. We had a nice pullback. So I don't want to buy on the dips when this is red, is what it's telling me. And it's always warned me that we could break down. So there you go. Those are some indicators that I'm looking at. That's from the economic calendar to the markets, to the sectors, to the world markets, all the way down to a special internal indicator. Hope this helps. This is Coach G. Catch you on Tackle Trading. Get in the game.